Be aware of expiring tax breaks. Tax extenders you can count on. Not so sure? Even though the tax extenders have been known since the end of last year, and there is general bipartisan agreement that they need to be acted on, there is no guarantee as to when they will be passed. The Senate passed a comprehensive extended bill. It's called the Expiring Provision Improvement Reform and Efficiency Act in April of 2014. The bill would have extended for 2 years over 50 expired provisions. The House, on the other hand, has focused on a permanent extension of tax provisions in a series of bills. Add to the mix, of course, is President Obama, who has threatened to use his veto pen on legislation he doesn't like. Tax extenders are temporary tax provisions that are reinstated by Congress on a regular basis and have been a reoccurring part of the tax arena for years. Most of the current group up for debate have expired at the end of 2013, and their eventual extension will be retroactive, but not all will be extended. Here are some of the best bets. R&D credit. This perennial extender, also known as research and tax credit, or research and experimentation tax credit, was available as either a 20% traditional research tax credit or a 14% alternative simple credit. Look for this to come back. Section 179 expensing. For the years beginning in 2012 and 2013, the maximum Section 179 deduction was $500,000. That maximum dropped to $25,000 for after 2013. Extender legislation will restore this enhanced amount of phase-out threshold under Section 179 prior to 2014. This is a great deduction for expensing equipment that you buy. Another depreciation deduction is bonus depreciation, where you take half this year and the rest over the life of the asset for qualified property. Also, this is timely for the holidays. It's called food donation tax deduction, and what it refers to is businesses can donate their inventory of food to different organizations and get a deduction for it. This deduction, the enhanced charitable deduction for contributions of inventory, was enacted in response to Hurricane Katrina in 2005. It also allows a deduction for contributions of food inventory for taxpayers that are not Schedule Cs. This just doesn't relate to businesses, it's for individuals too. So keep those receipts when you donate food to your churches for Christmas and for Thanksgiving, or to other charities that you donate your food items to, and clothing and toys. Keep those receipts. Sales tax deduction. Prior to 2014, taxpayers were allowed to deduct state and local sales taxes and use taxes in lieu of state income taxes on Schedule A. I saved a lot of taxes on this one. Work Opportunity Tax Credit. The WOTC allowed businesses to claim tax credits of 40% of the first $6,000 of wages paid to new hires and 8 targeted groups. Not many of my clients needed this one, as they were still pulling out of the recession. However, the best one was Qualified Veteran. Some of the other were Qualified Designated Community Residents and Vocational Rehab Referrals, Qualified Ex-Felons. Also included members of families receiving benefits under Temporary Assistance to Needy Family Programs. Another one was Qualified Food and Nutrition Recipients, qualified SSI recipients under long-term family assistance. This is a good one, so research it if you have a possibility. Qualified small business stock. The holder of such stock, acquired at original issue by a non-corporate taxpayer and held more than 5 years, could exclude 100% of the gain from the sale, rather than 50% of the gain, if acquired prior to 2014. Keep this in mind when you are structuring your sale. Credit for credit efficient improvements of existing homes. The 10% credit for purchase of energy efficient improvements to existing homes allows up to $150 of energy efficient for furnaces, up to $200 of credit for efficient windows, and up to $300 for other improvements such as insulation, with the total credit capped at $500 per taxpayer. This is a small credit because these things cost a lot more. But everything helps, and your taxman using this may save his fee. The American Opportunity Credit for 4-year college is still in effect, but there are some changes. But for those people who go back to college after graduation, may be helped by this one. The above-line deduction for higher education expenses. This deduction was $4,000 for taxpayers with adjusted gross income of $65,000 or less, $130,000 for joint returns, $2,000 for taxpayers with AGI of $80,000 or less. The next one is tax-free distributions from an IRA for charitable purposes. This is one everybody was looking for. However, it's only for people that are 70 and a half or over. IRA owners older than 70 and a half could exclude up to $100,000 per year of distribution made directly from their IRA to their public charity. This was great because you didn't have to cash out the IRA and then donate it, which made your IRA taxable gross income. So this is a good one, and I hope it comes back for the elderly. One that we don't think is going to make it is the offshore tax break. One extender that is unlikely to pass is the look-through treatment of payments between controlled foreign corporations. According to Bloomberg, it allows corporations to move money offshore across different borders. It says that if they move money back to the United States, they have to pay taxes. The rule is a way to get around some of the taxes. It is very popular with international businesses. But I can see that it's not going to make it through the legislative process in today's environment. Business would like to know, taxpayers would like to know, for tax planning purposes, what Congress is going to do. IRS would like to know so they can get out the forms on the programs for its system on time. Preparers would like to know so they can begin a timely tax season. However, with the environment that we're hearing between Obama and the Republicans, I'm not holding my breath. But that being said, hopefully these and many more will get extended so that we have low taxes and successful businesses. Happy taxing!